Everyone. We are ready to get started. My name is Denis Khromov. I'm CEO of Scoreplex. We are at Scoreplex provide solutions for fraud pre-check at early stage based on digital footprint analysis. At the same time, we deliver alternative data for better credit scoring. And today, together with me, Mark Rudak from GiniMachine, product owner of GiniMachine. Together with Mark, we will tell you how alternative data can transform and improve credit decision, and we will show you GiniMachine and the exact data set, how actually it improves and what data is really valuable for improving credit decisions. So I would like to start with the problem. The problem is following. At the moment, there is more than 1.4 billion population is unbanked, and there are lots of countries in emerging markets, especially in APAC and in Latin America, where the share of unbanked population is more than 60%. And it means that these people have never been interacted with banking products and services, and there is no information in credit bureau about these people. So it leads to a couple of pain points and challenges. First of all, that's lack of scoring data, especially in the regions with high share of unbanked population. At the same time, it leads to very high default rates, up to 30% there. And some of the lenders actually don't have enough information for first credit, and that is why they provide the first credit for everyone and start generating revenue after the second and third successful loan. So the solution is data enrichment with alternative data, and I would like to share the information based on FICA report, and there is a list of different alternative data points that can improve the Gini index and improve credit decisions. So there are a list of the most valuable data points. First of all, rental and utility information can improve scoring model accuracy up to 10%. Social profiling data can improve up to 15%. At the same time, it's possible to go deeper and better understand the connection of the person and extract information about his connection and improve up to 20% the model. And also there is Clearstream data also is available. So we made several experiments and we would like to share POC information together with GiniMachine, and we actually combine social demographic data with alternative data from Scoreplex, and we will show you how it improved the scoring model. And I would like to make a short spoiler. There was a significant growth in model accuracy and in Gini index when we combined alternative plus traditional data. At the same time, using Scoreplex, it's possible to cut off bad applications before credit scoring. So in some cases, it can save lots of resources and money. And we can cut off synthetic or fake accounts or bad applications very fast at early stage, providing only trustworthy users to the next stage. And we have a couple of cases where our solution can be really successful. First of all, that's pre-KYC screening. As I already mentioned, we can cut off bad applicants at early stage. At the same time, we deliver a list of alternative data from more than 300 open sources that actually improves the quality of scoring model. And now I would like to tell you more about the data we actually aggregate. So first of all, we create a profile of the person from digital footprint. So we aggregate information about online presence, how many social media accounts connected to the person, information about this person itself. So that's information about education, job history, geolocations, information about an activity different accounts, and also we do face and name matching because real people have pretty profound digital footprint going into the past with pretty consistent indicators like name, matched email, phone number, numerous of data leakages, numerous of profiles, and these kind of people are trustworthy, and we can work further with them. At the same time, we analyze email risks like email deliverability, domain age, blacklist related to fraudulent activity in the past. We analyze telco data, IP risks, and data breaches. And as a result, we will deliver a comprehensive profile of the person with a list of connected accounts, the names we found across digital footprint, associated emails, phone numbers, job history, profiling of the person, and the list of social media accounts that we found with information from them. So I would like to pass the mic to Mark. Mark, so mic is yours.
All right, thanks Dan for the intro. I'm about to share a screen right now. Yeah, here it is. I'm Mark. I'm representing the product team of GiniMachine. And today, actually, we will see how actually far we can go beyond the score. And I'm personally was surprised when we first started utilizing the alternative data, how the model improved. So, and today the session will be split into two parts. The first part is a small presentation talking about the challenges, how alternative data could be potentially helpful. And at the end of presentation, there will be a short schema of the live demo itself. And during the live demo, we will see in action how our data, what is actually our data, how it could be helpful. And we will see two separate models, one with normal social demographic data and one with joint case within our data. And we will compare the model side by side. So firstly, let's start with the challenges. I think many of you are familiar with the challenges, and there are, I would say, plenty of challenges, and on the slides, there are just few of them. And for sure, many organizations right now are struggling with an accuracy, predictive power of the model. The NPL is unstable, and for sure, it's somehow linked to the microeconomic situation in the countries, in the world overall. And the development cycle of the model, it's always been a long one. Right now is a bit faster to build a model, but there are still risks within hidden assumptions with the deployment, and for sure with the monitoring. And the monitoring linked with the first kind of problem where the NPL is an unstable one. And for sure, it's all of these factors can affect the economic situation in the organization. And utilizing third-party ratings is somehow good, but when it's lacking of transparency and every organization use the same kind of third-party rating, and here we lack of competitive advantage. Sometimes it's expensive, but not always for sure. And the competition pressure is going on right now. Many companies evolving their credit scores, more and more data has been generated. And for sure, here we come up with the solutions that could be potentially helpful in order to scale the data, in order to process the data. And for sure, when we build a model, we want it to be explainable, transparent. And as an EU, for example, AI Act took place right now. The regulators are organizations trying to be compliant, trustful, and AutoML solution could be very helpful in this situation. So here actually the few use cases we've been working with, from banks to small NBFIs, and here the trend is very much the same for every organization. We see the positive trend in the metrics. We see, for example, in case of telecom data with the Mobicom, they've been able to, just by out of the box solutions, they've been able to decrease their NPL by 4-folds. And companies that work not only with credit scoring as well as collection lead scoring can potentially utilize the alternative data in order to improve their ML based as well as business proxy metrics. So here we see that actually what is alternative data, how it's been utilized. It's from telecom up until device metadata, as well as digital footprint and mobile metadata, which is Scoreplex providing as well. We see that we can digest unlimited number of rows, columns, processes with a high speed, doing agile feature engineering, build unlimited number of models for different products for different regions. And as a result, we have potentially additional signals which are trusted by the organization and which is trustful by data providers as well. So this is the workflow of the live demo that will be done just until I will be finished with the presentation. And it's going to be split onto 2 parts. First, we see what is traditional data, what are the features could be potentially helpful in order to improve the risk assessment. Then we build a model automatically with GiniMachine. We estimate from different angles the model using inbuilt out-of-the-box instruments, metrics, and so on. Then we will integrate at the same data set, we will add up the alternative data. We will see what are the features, how they look like, and then we build an enriched model. And as a result, we will see that the credit scoring been improved. We will compare metric by metric how it's been improved. We will look at the attribute importance. We will see the new signals that are come up after we've built a kind of enriched model. All right, colleagues, right now I will share the data set that will be used in order to build a model. Let me reshare the tab. All right, so what we see right now is the, I would say, traditional data set that's been processed by many organizations, for sure, in terms of features, in terms of amount of columns, in terms of rows. It's all different across organizations, but this is somehow a pilot data set. And what we see here is that the data types are different. There are numerical data types, there is nominal data, and so it could be missing values as well. So I guess this data set has somewhere around 15 columns. And so there is only actually must in order to process, in order to build any binary classification, is having a target column. In our case, we call it OK column, where once defines the good client, the one was approved for credit and was not in default. And it's 6 months on book, 6 months on book on the credits, and there are some ones and zeros, and for sure 0 means a bad client. And by implementing any risk assessment, we want to have as less as bad clients while managing the good client amount. So we are trying to find a way to balance between non-performing loans rate and the acceptance rate. So I already uploaded this data set just in order to save time. And we see that out of the box, the Gini index that was calculated on a holdout test set, it's called blind test. The Gini index is already pretty high. It's just around 0.7. and it was done on almost 1.5K of applications while doing blind test. We want to dive deeper into the details of the model. We see that overall 16 columns were uploaded in the system. Target column is okay. So roughly 15 features were used in this risk assessment. The Gini index is 0.7 with an NPL rate in a data set 20%, which is pretty high. And for sure in the future, while deploying the model, while using it in production, we want to optimize it to the minimum. ROCAUC 0.85, which is quite good, and KS score is 0.57.
Excuse me, Mark. Just a quick interruption that we still see the Excel file now. Could you maybe share the screen of GiniMachine? Merci.
All right. Yeah. Thank you. Thank you, Tatiana. Yeah. So I already pre-built the model. Sorry. I already pre-built the model, and out of the box we got pretty good Gini index, which is 0.69, and on a blind test with 0.4K of applications. And diving into details even more, ROCAUC pretty high, 0.85 with a KS score of almost 0.6, and with a pretty high NPL, 20%, what I already mentioned. So talking about the distribution of scores in bad and good distributions, we see that for good clients, the peak of scores somewhere close to 1, which is very good. So we are good at detecting good clients. But talking about bad clients, we see there are two modes, two peaks. The first peak is somewhere around 0.5. And so there is still some overlap of bad and good applications. And for sure, by enriching the model with an alternative data, we want this gap to be wider. So talking about calibration, the model is already quite good calibrated with a Breer score of 0.12. And attribute importance is very stable across the faults, across the cross-validation faults. And we see that among the top features is total amount, schedule depth, and principal price. And keep in mind this radar chart because we want to compare it within the one with an alternative data, and we will see how it changed. So, all right, right now I will upload the new file with an alternative data, and while it's been uploaded, I will see the features that are among the alternative ones, and we will see that there are many alternative features, and for sure any alternative data provider provides out of the box hundreds of features, and we've chosen just a few of them, for example. And even with few features, we will see the uplift in Gini index. So we see that there are missing data. We see, for example, the feature total account number. We see that some clients has a very good digital footprint in the internet. Some clients has no accounts linked to their email. And we will see how, for example, this feature and all other features will affect the final score and final predictive power. So this is actually the model that was built upon the social demographic and alternative data. And we see that Gini index has improved. It's improved to 5 points. And all the metrics has improved as well. So this is the same data set, roughly almost 5K of applications. However, the number of columns has right now 2 times bigger. And we see that in density distribution, we see that right now the overlap is quite less. And right now we can potentially, if we put the threshold somewhere close to 0.8, we see that almost all bad applications will be split apart. For sure, we can catch here the fraudsters, the bad applicants. So the overall, the ability to detect bad clients has improved significantly. So the Breer score is better right now. The model even better calibrated with a bigger amount of features. And in the radar chart, we see much more features has been included into risk assessment. And we see that the stability is still quite good. And on top of the social demographic features, right now there are features that are coming from the alternative data provider. For example, email domain, Truecaller, mobile operator, email first seen date. All these features for sure correlate with the digital footprint. We see that total account number has got pretty high importance. And so we clearly see that if we compare the models side by side, the first one got the Gini somewhere close to 0.7. This one is 0.74. KS score has improved even to 6 points. And the Breer score, the calibration power has improved. And what's the most important here is that we see that right now we can detect more bad clients. And this one can for sure optimize the revenue against the losses in here. So colleagues, that's all for my side. And we see that alternative data, on top of it, explainable AI, and as a result, our risk has been somehow improved, and we can even measure the growth in money, in metrics, and so on. Thank you so much, everybody. I think right now we have some time to answer the questions, if any. And then maybe, are there any questions in the chat? Emilia, I see that there are some questions coming up. Maybe we can unmute the people.
Sure. One moment, please.
Denise, I see some questions on the data, on the alt data in the chat. Maybe you can pick up few.
Yeah. So when we speak about this exact case, so we collected the data for B2C lending. But anyway, GiniMachine can be used for B2B data, and also we can extract data about the entities, about UBO, so it's also applicable for B2B scoring. How do you collect the data from the dark web? So basically, we don't collect the data from the dark web. We check if some of the data is leaked and available on the dark web. So we deliver red flags. For example, if we found numerous of personal information on the darknet, so we deliver red flags, so this identity potentially could be compromised. Where do you get the alternative data from? So we use different sources. So basically, we use 300 open sources, and we extract this data from open sources. That's social media. We do it in real time, messengers. We use public databases related to email fraud lists, phone fraud lists, and also we aggregate additional data points from telco providers and other data providers.
Yeah,
Mark,
then I
guess, the next one is for you. We don't have data. How do we build a model? Or do you have off-the-shelf model to use?
Yeah, thanks. It's a good question. And the examples I've shown you, those are built upon the data. And if you want to just try out the platform, we have the pilots data sets. So you can just pick them up and try out the platform. And you can for sure somehow get signals on what data you can potentially start collecting. And in the future, you can, on top of your own data, you can start building your own models. But I would not personally recommend to use other data sets, other domain-based data sets for your own credit risk assessment, because it's not actually somehow linked with your own business situation. So I guess I see another question is a good one on how is Gen AI going to impact the credit scoring and lending using alternative data. Jenny, then maybe you can start answering. This is as well as an alternative data. Do you think Gen AI could be helpful with an alternative data? And I will add up on the, yeah.
So I will start with the problem that actually GenAI provides. So at the moment, it's really easy to create fake accounts and easy to create fake identities. So you can do it in a couple of clicks. It will take several seconds. And actually, GenAI produce new potential risks. What we can do using alternative data, we can analyze digital footprint, and GenAI is not possible to generate fake digital footprint because a real digital footprint has lots of timestamps going into the past, and it's not possible to change the past. So you can generate synthetic accounts, synthetic digital footprints, but it will be obvious that everything was created within a couple of days. And that is how actually can be changed. Basically, we see a lot of potential risks related to generative AI, especially in credit lending. So you need to be more attentive to the applicants and use new solutions to actually cut off fraudulent applications.
So Gen AI basically introduced a new challenge for risk prevention, right? For fraud prevention,
Yeah.
I mean.
Yeah, definitely.
Yeah, from the modeling perspective, from what we see, from what we experiment with, is mostly about synthetic data that could be generated by the neural network. And we see right now in metrics, in proxy metrics, that Gen AI, when we want to generate some data for modeling, it's only introduced mostly bias than some meaningful results and signals. Then next question on GDPR, with collecting people's information. Should we ask any consent from the customer?
Yeah, so definitely we need to ask the consent from the customers. At the same time, regarding GDPR, so we don't collect personal data, we don't analyze the post, so we just deliver a necessary amount of data for credit scoring and for risk scoring. So that's actually metadata related to the person. So that's a number of social media accounts, number of data leaks, name matching, mail matching. So we don't disclose the information available on the darknet. We don't disclose personal information. We just deliver metadata related to the person. Yeah, there was a question regarding the plans for Scoreplex. So it depends on the volume you need. So the price range is between 8 cents up to 15 cents. Depends on the data set you need and depends on the volume you need. How is the approach adapted for B2B lending? So I can start, and Mark can add a couple of words from GiniMachine side. From B2B lending, we can deliver additional information about domain, about the organization. So, for example, we can check if domain is alive, if the website exists, how many website traffic available. We can check information about the founders and UBO of organization. So we can check the number of employees on LinkedIn, if founders within the list of employees, and we can deliver the list of additional flags that can be used for identifying if the organization is real, if it has a real financial activities, and so on. Mark, do you have anything to add?
Yeah, I think so. We are not somehow limited only in B2C lending in terms of the modeling. Just talking about B2B, for example, the SME lending, the set of features will be different, describing mostly the organizations, the cash flow, and so on. So there is no limitations towards B2C only. So I guess the next question was on privacy guidelines as well. So I guess
yes,
Dennis, you've already covered, right?
Yeah, I already covered. So just to repeat, we need to get a consent from the customer, and secondly, we don't extract personal information. We don't read personal posts. We just check metadata. That's actually 100% compliant with GDPR regulation. Mark, I think the next one is for you.
Right, is on required capital in a bank and GiniMachine to a new client in terms of feature and data engineering. I guess I want to point out that in GiniMachine, the data engineering, the feature preprocessing is all been automated with a set of inbuilt domain-based heuristics. And so the model is built automatically, and the risk assessment, evaluation, it's all been included in the platform. So when you sign up to GiniMachine, you will see the same interface that I've shown you out of the box. And on a risk, on a improvements on required capital, I think last year we introduced the profit calculator in a GiniMachine interface. So in terms of gains and losses, it could be helpful, and it's going to be a good start point for you whenever you start using any risk assessment. And so you're welcome to try it out in the interface on your own data. So I guess the next one is from Adam. So it's on validation process. And Adam, so the question is quite simple. The most reliable way to check out your model is to start issuing the loans with a decision based on the credit risk model. However, it could be costly. That's why the validation is mostly conducted right now as a blind test, where we get the initial data, we split it onto two parts, train and validation subset. On the trained subset, the model is being trained, and on the validation, the blind test has been conducted. And for sure, in the system, you still can start experimenting. Even when the model is built, you can upload your own data set for scoring, for example, as a backtest, and you can compare the real outcomes with the scores coming from the model itself. Yeah, and I see the question from Diego on TransUnion, how it's accurate compared to TransUnion. And I guess the only way to compare in your organization is to try out both solutions and compare the predictive power of the models, the scores, and do the backtest. Because for different markets, the result will be different. It's not only about the country, but on the product type itself, because the client base is simply very different in terms of payability and so on. Yeah, I see no questions in the chat. Maybe someone want to ask with a voice so we can easily unmute. I see. Yeah, I see there is a question. So Mr. R, I'm not sure who is it. We've unmuted you so you can ask a question directly. And Mr. Ephraim, you've been unmuted as well.
Hello, can you hear me?
Yeah, we can. Hello.
Yeah, okay. So thank you for the presentation. It's really very informative. So I have a couple of questions. So maybe I'm here in Ethiopia. So we are trying to do credit scoring engine here for the banks and microfinances. So one of the challenge we are facing are, there is no formal credit history and transactional activity. That's already, it has been said. I think it's not a special problem. It's a common problem across Africa and other part of the world. So my question is, do you really believe that this alternative data source alone can replace the transactional activities and credit history based traditional model? That's one of my questions, because financial sector players asks and doubts the reliability of the alternative data accuracy. Do that tells us the creditworthiness of their borrowers? That's one of my questions. The other question is, how do you deal with the transparency and informed giving of this alternative data? Sometimes when you make it more transparent for the end user and the financial sector players, it's gonna be like people trying to alter your system and get benefits from the score. So that's also another question. And the third question is, do you have a plan to expand to East African market? Yeah, thank you.
Yeah, thanks for the question. Yeah, then you can comment on alternative data in an African region.
Yeah, okay. So I'll start from the question related to alternative data. So definitely alternative data won't replace the traditional data. But there are several cases where traditional data are not available, especially for unbanked population. That's where alternative data can bring significant value for first credit, for first loan in the region with a high share of unbanked population. Secondly, alternative data can additionally improve the quality of the scoring model. So using the combination of transactional data and alternative data can bring more accuracy and higher Gini index as a result.
Yeah, great. And I guess there was a question on manipulations with the data, where somehow the applicants can, can somehow manipulate with the model, which was based on the alternative data. So then what do you think, how we prevent, how we detect where for example, the digital footprint has been somehow manipulated? Do you have any solutions on that?
Yeah, definitely. So basically, as we can see right now, so bad applicants either don't have any digital footprint, so there is no data leakages, there is no connected accounts to email address or to phone number. At the same time, there is a second pattern we see that's compromised email addresses and impersonation. So there is a lot of places where you can buy hijacked email. So you can do it easily. The cost is very small. The email has digital footprint history, but what we do name matching and photo matching. So how it looks like. So we take email address and phone number, we aggregate the digital footprint connected to this person, and we check if the person who applied has the same digital footprint, and this digital footprint is connected to him. So there should be the same photo in social media profiles, the same name across social media profiles, and we see the pattern that when email address is hijacked, the digital footprint is connected to completely different person. So we can check this, and actually it helps us to put aside the case with impersonation, with fake accounts.
Yeah, great, thanks. And I see there is another question in Q&A. Do you really believe that alternative data alone could replace traditional or credit history data? Or it's somehow... All right, yeah, please.
Yeah. Alternative data alone won't replace traditional data. So as I already mentioned, it will improve the quality of model accuracy in combination, traditional and alternative data. At the same time, there is cases where traditional data is not available, and you need to get any data to improve the model. So otherwise you will have the random the random model. So you need some data to improve it, and alternative data will solve this case, especially in the regions with unbanked population.
Yeah, great, thank you. I think it depends on the region, for sure. For some regions, all data could work very well. For some region, the digital footprint is still not enough in order to do proper risk assessment. But mostly, I would say, when there is all data plus social data, social demographic data, it's only improving the risk assessment.
And also one thing I would like to add from my side, so using digital footprint analysis, we can filter out fraudulent application before scoring. So we have more than 200 different signals that helps us to identify fraud, identify fake accounts, identify impersonation, and using Scoreplex at pre-KYC stage, you can cut off the fraudulent applications, and we can pass to the next stage only trustworthy applicants, and you can actually save money for getting additional data to score bad actors. At the same time, you can save lots of resources of your compliance team not to spend time and resources for verifying bad actors, because we can identify them very fast at the early stage.
All right, great. I see no questions in the chat. So, and personally, I invite you all to try out the quick pilots on your own historical data plus alternative data. You can compare the gains within days. So, and you can actually drop a message in the chat. So, and we will be back to you with the personal demo as well. Yeah, I see no questions. I guess we can. Denis, do you have any questions? Anything to add from your end?
No, so I don't have anything to add, so you're welcome to get free pilot with Scoreplex. So there are 2 cases, fraud pre-check, pre-KYC screening, and additional alternative data for improving scoring models. Thank you for joining today's webinar. Have a good day for everyone.
Yeah, thank you, everybody. It was nice having you.